Hello, everyone, and welcome to another edition of the Forex Technical Market Update for Tuesday, August the 4th, 2015. And the markets this morning remain in consolidation. The price action has been fairly tight so far this morning in the dollar pairs. Taking a look at the Canadian dollar versus the US dollar or USD CAD, we still remain above that critical resistance of at 130. That 130 resistance area, the market remains above this area. And as I said yesterday, I'll be keeping an eye on whether or not the market is able to close for another month above this resistance area. Last month we closed slightly above the area, so we're going to see if we have follow through buying in this USD Canadian dollar. If that does happen, we could see further losses in this currency pair. And just looking at it, we between July of 2014 and we have just finished July of 2015. So in just over a month, this market has moved from 106 to 131. That is quite a significant move there, and that's really over 2,500 pips. So these markets do make some rather large moves, and it's just a matter of getting aboard the trend and riding that trend until the trend ends. Okay, so that is the USD Canadian dollar. Taking a look at the euro dollar, again, very tight range. Let's take a look at some weekly chart, some weekly bars, and as you can see, over the last number of weeks, ever since the market bottomed in March, we have been in a range between 105 and 115. And then in the last 6 weeks, we have been in a range of between 112 and 108. So 400 pip range, very tight range for this currency pair. So the market is looking like it wants to break out of this consolidation. And what you may find is that this breakout could be fairly violent. And violent as in the price action will move swiftly. So it's definitely important that you keep an eye out on what's happening in the markets here, and 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 if we do see a breakdown or a breakup, you should be positioned to take advantage of the particular move. Okay, moving on with the British pound, similar situation. Market is in a consolidation pattern. Looking at the last, let me just clean up this chart. Looking at the last Fibonacci off. Okay, this is a weekly chart of the British pound versus USD. And looking at the last couple of weeks, we see that the market is really trapped between 156.29 and the low of 153.30. Actually, the actual high was not 156; it was 156.90. So 156.90 and 153.30. Very tight range for this currency pair. And that's why trend traders have just been, if you have a trend trading tactic, you would just be really keeping an eye on the market, and your portfolio is not really moving that much. It's just meandering between a certain range. And as I said before, the breakout, whichever way this market breaks out, you have to be prepared to take advantage of that particular move. Moving on to the Australian dollar, that's the market that has seen some price action this morning. We see the Australian dollar up fairly significantly. The market opened up at 72.74, and we are currently at 74.04. So a fairly big move up in Australian dollar. And Australian dollar has moved this morning against most of the majors. For example, British pound, Australian dollar has seen significant movement. The Australian dollar versus the New Zealand dollar has seen significant movement this morning. So that's the only currency pair that's really moving significantly this morning. Looking at the New Zealand dollar, this is a market that has been in a strong downtrend since April of this year. April, you see the market moving down pretty strongly, and we have a. If you take a look on the 4-hour chart here, we see that we are in a minor triangle here. And that's why it's important to look at these triangles, because they happen in a lot of currency pairs and they happen all the time. Okay, so we have a triangle, and normally, let me emphasize normally, the market started in a downtrend and the market normally continues in that downtrend. Now, this does not necessarily happen 100% of the time, but just note that the rule is that the market will continue to the downside, but you have to prepare prepare for an upside breakout, and that's why I use stop losses. So the very interesting phenomena on the New Zealand dollar versus the USD, and I guess this is the summary of what I've been speaking about this morning in terms of the dollar pairs. This is the chart, the daily chart of the US dollar index, and we're just meandering in consolidation. And as you can see, the market is at the upper portion of this consolidation pattern here, and we need to see some breakout in either direction for price action to start to gallop in either direction. So during a consolidation, as I said yesterday, it's just important that you keep an eye out and you keep your powder dry, because when the markets start moving, that's when, if you're a trend trader or a swing trader, that's when you'll see rapid gains in your portfolio or your trading account. Okay, if you would like to have these signals sent to your trading account, and as I said yesterday, it's important that you get involved before the markets start to move, because sometimes we don't want to be chasing the market. So if you want to get involved in the signals, they are sent directly to your trading account. You can click on the link below this video. This is Beyond. I hope you have a good day, and I'll see you again tomorrow.